going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I just had a video with Dividend Obsession. I was interviewed with him, and it was a really good podcast today. So I'll post you the link. It's actually March 10th that we had. It was a lot of fun. I really like Troy, really like his investing strategy. And hopefully we'll do round 2 together with the Yieldmax ETFs and discuss high yield dividend stocks. But I have 2 dividend stocks that are at a risk. And could there be a reverse stock split coming with them? They're very popular high yield dividend stocks. Things are just not looking good for them. And I'm going to go over them. I'm going to explain to you why I'm not buying them. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Happy Starbucks dividend day for you M1 Finance dividend investors like myself. Smash that like button right now. The first dividend stock I want to go over, a monthly dividend stock, a high yield dividend stock, is Prospect Capital Corporation. That's a monthly dividend business development company. A lot of people like PSEC, but I'm going to tell you the trends just don't look good. So the past 5 years is like right before the pandemic hit, it was at 656. Then it made a big rebound at 920 in 2021. And then it's just trending down. It's actually $5.74 less than pre-pandemic. So that's not a good sign at all. So I've reviewed them before and I just said, hey, I am not buying them. They look terrible. So I'm going to jump to the revenue trends and dividend history. We're seeing some really bad trends. So I wanted to go over the year-over-year quarterly growth and look at 2010 and 2012. It was fantastic. And then you look at 2013 on, it's been terrible. 2016 to 2018, it looks negative. 2020, you can understand. I mean, it's a pandemic. Then in past 2022, it still hasn't done very well. So again, it's in the negative in December 31st, 2023. That is not impressive. That is a red flag. That is just screaming possible yield trap. And we're going to jump to the dividend history. So I'm going to jump to NASDAQ.com. The dividend trends, and I always tell people to study the dividend trends when it comes to dividend stocks because there could be red flags for yield traps. And again, the revenue stocks, business development companies, 90% of what they make go back to investors. So I showed you that graph of the dividend history. And looking at 2013, it was 11 cents. 2014, it was 11 cents. And then 2015, it dropped to 8 cents monthly distribution. And then in 2017, 6 cents. And it still hasn't rebounded, which is not good. So its dividend yield is 12.61%. If you bought one share, you made 72 cents. So again, the price per share is down and it's decreasing, which is screaming for a dividend yield trap. And the other thing is, could there be a risk of a reverse stock split because the trends don't look good? It's decreasing in price per share and it just hasn't rebounded. So I want to just make you aware of that Prospect Capital is not doing too well right now. I'm going to jump to another dividend stock that is having issues. This is another one that has been in serious trouble. So in the past 5 years, AGNC has been doing terrible. So at one point, it was against the S&P, it was up 9.28% in 2020. Still has never recovered since the pandemic. So pre-pandemic, it was, let's just say, 1926. Right now, it's sitting at 951. There's been some dips, 787. They're at risk of a potential reverse stock split. A lot of people like it at $10. A lot of people like stocks at $10. And then if it keeps on dropping, then you're going to have an issue of, the board of directors having to pull the trigger because year range was 681 to 1125. The market cap is 6.38 billion US dollars. So if it continues to drop, then there could be a risk of being delisted, because you can be delisted if you drop a certain price and you haven't rebounded. That's screaming for a lot of problems. The other thing that's a problem with AGNC, I'll jump to their revenue trends and dividend history. And their revenue trends have been atrocious, and really they have not rebounded. So annually in millions US dollars, 2013, 2,193, 2014, 1,472, 2015, 1,466, 2016, 1,321, 2017, 1,293, 2018, 1,949, 2019, 2,842. Looks like we got a comeback, and then all of a sudden 2020, 1,519, 2021, 1,361, 2022, 1,590. So the trends are really bad. There's really no consistency with their revenue. And again, as a mortgage-backed REIT or a real estate investment trust, 90% of what they make go back to dividend investors. So I'm going to jump to its dividend history. So here's its trends in 2015 and 2016. The monthly dividend and the distribution is 20 cents. That's very attractive. And then it jumped to 18 cents. Actually dropped, excuse me. It dropped to 18 cents. Then it dropped to 16 cents in 2019. Then it dropped to 12 cents in 2020. It just hasn't recovered. And that's not very attractive. The dividend growth in 5 years is negative 6.91%. So if you bought one share, you made 144 with a 15.14% dividend yield. Look, I love high yield dividend stocks. I just did a video on them. And the thing is, if the revenue's not in sync, or the revenue is not going up and the dividends are not going up, we got some problems. So that's a big red flag with AGNC. So I wanted to point that one out. So I have one more to go over. That would be ARMOUR Residential REIT. So that one has gone through some issues. So if you look at here, that's a sign of a reverse split. So things are not looking very good. You can correct me if I'm wrong. I'm pretty sure they had a reverse split, so they needed to look maybe a little attractive to shareholders. So that's why they do that. And they need to be attractive to people, because if you start seeing the decrease in price per share, that can turn off investors. That's one reason why they do that. The other reason is to avoid being delisted usually. So you see this being so high, and then there's a decrease, and it's still just, let's just say, the past year. Right here, 2715, and it's already down to 1902. Not looking very good. Then I'm going to jump to, well, actually, next, I'm going to jump to the revenue trends and dividend history. And in fact, they did have a 5-for-1 reverse stock split. I just looked that up just to verify. But look at its revenue trends. 2014, annually in millions US dollars, 450, 365, 263, 254, 283, 439, 169. Right there, you can blame the pandemic. Then in 2021, it's 80, and then 228. So there's still a lot of inconsistency with the revenue trend, which is not very attractive. And I'm going to jump to the dividend history. And again, look at these trends. This is atrocious. So starting in 2015, monthly dividend, 33 cents. 2016, 27 cents to 22 cents. And then 2017, 19 cents. Then it goes down to 17 cents. And then in pandemic, 9 cents. That's kind of understandable. If you see a pandemic, things get hit hard, that can happen. Then in 2020, 10 cents. Then the reverse stock split happens, but You'll see that in 2023, but it dropped down to 8 cents. So look, 40 cents. And then all of a sudden it's down to 24 cents. So again, it's decreasing its dividend over time. Sure, you'll see a high payout ratio with REITs, but the dividend growth in 5 years is negative 15.79%. So if you bought one share, you made 288 with a 15.14% dividend yield. Now look, let me just be straightforward with you. I love high yield dividend stocks, stable high yield dividend stocks. I own them in my dividend portfolio. I just did a video on them. But these are dividend stocks and REITs that I will never touch with a 10-foot pole because of the dividend trends and the revenue trends. So that's one tip I can give you. Of course, this is not financial advice, but you got to study trends before you pull the trigger on certain dividend stocks. If they're high yield dividend stocks, you need to look at them more carefully before you make investments on high yield dividend stocks or monthly dividend stocks, because sometimes I've seen with a lot of these monthly dividend stocks that they start off as quarterly dividend stocks and then they turn to monthly dividend stocks, maybe to be more attractive and attract those investors. Now, Agree Realty Corporation, that's a different story. They were quarterly and then they ended up being monthly, but their dividend growth is fantastic and funds for operation. But you're seeing terrible trends with all three of these. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Make sure you subscribe if you're new. And I really did have an amazing podcast with Dividend Obsession. I can't wait to show you guys that video. So take care and have a good one. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. Do not use this YouTube channel for any form of tax purposes. It is best to seek advice from somebody certified to give tax advice. So just be aware of that. Investing is a big risk. You got to be aware that you have to do your due diligence, and you can gain money, you can lose money. So just be aware of that as a investor. I hope you enjoyed this video and enjoyed my quick speed run with high yield dividend stocks. So take care and have a good one, and I will see you Sunday.